In this video, we'll be going over the implication and future for gold prices. Once again, please perform your own research. These are only my opinions. These are the topics I will be going over today. Recent asset classes price implications, recent gold price implications, and also the future outlook. Recent asset classes price implications. That was a mouthful. For treasuries, yields continue to move lower. The bond market is signaling that it's still pricing in recession. The US 10-year treasury closed at 0.587%. The March low was 0.569%. So we're really approaching that March low, meaning that was the most fear in the market. Next up for US dollar index, it closed at 94.35, breaking the March low of 94.89. This is an interesting signal. So the US dollar continues to plunge past the March low where most investors were most worried about the US economy. That means that right now it is possible that investors are having more fear than in March. The one thing to take account for is the only reason why yields are this low with the 10-year below 0.6% and the 30-year below I think it's at 1.25 right now. The only reason it can be that this low with the Fed promising interest rates inflation to be at least 2% is because the Fed has been buying all the US treasuries to keep yields low, because by doing so, then the government, U.S. government, can continue to borrow at lower interest rate. If in effect it doesn't, but it perceives it can still continue to repay its debts for the interest payment to not go in default. For stocks, as Q2 earnings continue to come out, valuations are starting to adjust. One good example is if you look at Tesla, I think it was last Monday, it just made a new all-time high, almost at $1,800. But after Q2 earnings come out, even though it beat expectation, the street was expecting a negative, I think, 0.1 dollar EPS, where it beat expectation and come out to be $2 earnings per share. But the stocks continue to move lower. Now it's 20% below the new all-time high. This is pretty scary. It's really telling you that people were too optimistic going into it, and the earnings didn't justify the valuations, and could be just people taking profits. It could rally back up, but I still think it's so expensive at this level. The FANGs, as mentioned before, are now also under pressure. As mentioned before, they're the ones that took the whole market back up from the March lows. As you can see from the Nasdaq, when it outperformed the Dow Jones and also the S&P, as Nasdaq is heavily weighted by the tech stocks, mainly the FANGs. And again, my prediction is if the FANGs continue to be under pressure and they start moving lower, then this whole FANG motivated driven market rally is now in question. Finally, COVID-19 cases continue to climb. There's more fear of more closures, and the hopes to return to normalcy anytime soon is fading. That's definitely putting more pressure onto investor sentiment. But one thing it does in terms of investors who are still willing to bid up the market is that they're expecting more stimulus, more bailouts, and that means more inflation or money creating by the Fed. I'll discuss this later, and that bids up asset prices, and they're just trying to front run that any stimulus or any new money coming in. So for recent gold price implications, for gold, it has already made new all-time highs in other currencies except for US dollar. I think it's only the US dollar left. I'm probably wrong, but the main ones in terms of like Japanese uh, yen, Chinese RMB, euro, like um, and other currencies. The US dollar all-time high was at 1920. It was intraday. Um, this Friday closed at 1900, so we're only like 20 bucks away. Now, assuming the gold price, like in terms of gold value, doesn't change, it's not that gold is gaining in value, but rather fiat currencies are falling in terms of their value, which is purchasing power, because as there's more, again, like as there's more and more um, fiat currency chasing the same amount of goods, the value of each fiat currency is diminished because the amount of goods you can buy with it is not as much anymore because there's more uh, paper chasing the same amount of goods. In terms of financial news and commentators, there's very little coverage of gold. They barely mention it. Some of them saying like, "Hey, um, it's just fear with like the U.S.-China tension, with them closing embassy and of each other's." Normally, gold reacts in an inverse relationship to stock market because if investors are bullish about the economy, they'll buy stocks, sell gold. Gold is held as a safe haven, as a hedge normally for like stock market. That's why it has like a negative beta, so like meaning if the stock market goes up, gold goes down, and if stock market goes down, gold goes up. That's kind of the normal um, relationship. But then a lot of people are getting confused or unsure why gold prices continue to move up along with the stock market. The reason for that is the reason they're going up together is not because of fundamentals of economy, but rather the stimulus, liquidity, and inflation. When the Fed and Congress are promising more liquidity and more money printing, what happens is, a bit up asset prices. And that's why stocks are going up. And because it's bidding up or it's inflation, that's why gold is going up. And so that's why you see that both stock market and gold are going up together for recently. A lot of people think this rally will be short-lived, again, claiming to US-China tensions, but I don't think they understand that gold is not going up as much as its safe haven status, but rather as an inflation hedge. So for future outlook, Congress, the previous virus package in terms of the $600 a month or a week is expiring in July. Stephen Mnuchin, the Treasury Secretary, is hinting that the new virus package is coming out. Like everyone said, at least it will be $1 trillion. And I don't have any doubt that this new bill will be passed, as it is a election year, so neither party wants to deny citizens of any quote like free money, because there's like if everyone gets an extra dollar, nobody gets an extra dollar because the price just goes up, like, and the amount of goods you buy with it doesn't increase. But hey, most people don't realize that. They just want to get that free money. For the Fed, with tax revenue gone, what happens is a lot of the new treasuries that will be issued by the federal government in order to pay for all these stimulus, it will have to be bought by the Fed, because like no one is buying US Treasury at these yields unless you're speculating. You're not holding it to maturity because you're guaranteed to lose money because the yields you get on like a 30-year, like 1.25, is lower than the Fed's promise of 2% interest rate. So no one is holding it to maturity. They're either speculating or it's the Fed. The Fed is buying it because if the Fed doesn't buy it, the yields will move up. That means higher interest costs for the government and possibly even default. I mean, they are in default, but they're just using the central bank, using inflation to cover that fact up. But in effect, they are defaulting either honestly by, hey, sorry, we can't pay you. Maybe I'll pay you like 60% or 80%. You negotiate with your lender, or dishonestly by printing money and repaying with inflated dollars. So even though, yes, you're getting your, like, let's say $100 back like 10 years later, but that $100 can't buy you the same amount of goods as you can today. Now, eventually, the Fed has to abandon its dual mandate of unemployment and inflation if it continues on this path where keeping unemployment low and inflation at like 2%, because inflation eventually, it won't stay at 2%. It's going to go a lot higher based on how much stimulus they're doing. Now, the Fed will continue to print money to buy financial assets to keep the music going. And, you don't stop dancing until when the music is going. And eventually the game will be over one way or the other when the US dollar is worthless or people's confidence in the US dollar fades away. But I guess that's the same thing. Continuing with the future outlook, gold, I have no doubt that it will make all-time high. It's not an if, but when. Because if you think about the last all-time high in September 2011, if you look at the issues that exist then and the issues existing now, the problem has increased. The national debt is bigger, corporate, household, and state, and municipal government, all the debts have ballooned greater because they successfully kicked the can down the road with the false belief that the Fed could shrink their balance sheet and normalize interest rate. But that has now been proven to be impossible. If you can't shrink a 4.4 trillion balance sheet, they only did it to like 3.8 before restarting money printing. And interest rate couldn't increased until 2018, but is immediately reversed, and now we're back down to zero. And in terms of future gold price prediction, there's a lot of predictions, people saying it'll be like 2,000, 3,000, 5,000, 10,000. I think it could, to make a pun out of it, it could be 2020 by 2020. But I personally don't care what any of the predictions are looking to be, as long as the Fed keeps printing. The sky is the limit for gold price in terms of US dollar, because the US dollar is losing value as gold is just constant. Silver, definitely more upside in my opinion. Its all-time high was just below $50. I think it has no problem surpassing that due to recent massive inflows into ETFs. For silver, like SLV, I think had $37 million inflow for the past last 4 trading days. And that's the demand side, because the ETF is supposed to go out and actually acquire physical silver. I don't know where they're getting it, because there's been a lot of mine closure recently, and like 37 million in 4 days. That is a huge amount in terms of such a small market of like silver. And on top of the mine closures, there are actually some producers who are, pretty like really smart about it. They've been actually holding back their supply of silver with anticipation of future prices being a lot higher. So, there's the increase in demand and the shortage in supply, so prices have to go up, at least in my opinion. And it's the same pressure in terms of higher prices to gold for these factors.